Hi, this is Raman. Welcome to another episode of the 10,000 Trade Show, where we are mastering trading and creating excellence through the deliberate practice and analysis of 10,000 trades. Today, we'll take a look at how to use volume to trade Forex. So let's go on to the charts and we'll look at how to use volume in combination with the price action so that you are taking more effective trades. Here we are going to look at how to use volume to trade Forex. As you may have heard, a volume is not something that is used very often in Forex, and one of the reasons behind that is because we don't get true volume in Forex. What we are getting is our broker volume. So this is different from other markets like stock market and futures markets where all transactions go through a central exchange. So there is, so it's easier to find the true volume of those markets. However, in Forex, we have different brokers. There's no central exchange. As a result of that, we do not get true volume. However, I use this Hawkeye volume indicator, and they have some algorithms where they are able to basically come very close to the true volume based on the transactions that are flowing through. All right, so that's the indicator I use. So let's take a look at how do I use volume. So I don't depend just on the volume when I'm trading Forex. I like to use volume together with price action. So in this example here, we are looking at EuroCAD 1 hour trade. So what we have here is that price had been going up, then we see a drop here, price pushes up and then comes back into the same level here and then bounces off of the support resistance area. So now we get a bit of a double bottom formation here. In this case, from price action perspective, I would take a look at these two candles and then I would like to go long on this because overall our price action is pointing upwards. The momentum is to the upside. We have a double bottom. We suggest price is likely to go higher. But also from volume perspective, we can see here the green candle here. Once the green candle comes in, so if you take a look all the way down here, the green candle here coincides with our neutral volume, which is the white in the bottom there. And then it's the second green candle here, which looks like a little pin bar here. That's where our green volume starts. So we do not want to take a trade at the close of this green candle here, even though it's a green candle, which shows that price is rejecting this level because our volume hasn't quite confirmed that entry. So you can use volume as a confirmation for taking entries or when taking entries. So once we have the second candle close here, we see our volume has turned green. So at the close of this candle, this is where we can take our entry long. And our stop would go below the pin here, just in case price decides to come back and test this level once again. So we enter the trade long, and as we can see, we continue to go higher as the price is moving up. And basically what we have here is green and white volume here. And as we can see, we do not see a lot of red candles and our volume does not show any red. So we continue on with our trade, and once we get to the top over here, we see that price has gone into our resistance level here. It's not going any further, it's just going sideways. So this is a good place for us to exit the trade. And if we take a look in the bottom here, we see red volume finally starting to come in. But just because price is going sideways here, it's not really moving any further. This is just a good time to close out the trade. We also have a little bearish pin bar here, and we are into resistance. So those are all reasons that suggest that it's we could see a pullback. So it's a good time to exit the trade. So just to recap here, I use volume with price action and I use it as a confirmation when I'm placing a trade. So in this example, we have a double bottom scenario from our price action perspective. Then we go to check our volume, and it's the second candle here, the little bullish pin bar here. That's where our green volume comes in. So our bullish volume does not come in till that candle closes. So we close So once the candle closes here, we would go long in this trade. Our stop would go below this pin here, and we can stay with the trade. And we see that most of the volume here is green. There are some parts where the volume turns neutral here, but for the most part, it's all green. There's no red. And finally, we see that price starts to go sideways, and we have a bearish pin bar here. Good time to exit that trade. From entry to exit here, we get 100 pips in our trade. So our profit is 100 pips or $1,000 if trading one standard lot. Thank you for joining me today. I hope you enjoyed this episode. If you like this video, please feel free to share it with your friends. And don't forget to comment, like, and subscribe to the channel. That's it for today, and I'll be back with another great episode next time.